Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 6, 2024, and we're diving into Cencora's latest earnings report for the fiscal year 2024, fourth quarter and full year. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Cencora's performance, especially given their significant growth and strategic moves this year.
Absolutely. Cencora has reported some impressive numbers. Let's get into the details. Revenue and profitability overview. Let's start with the top line. Cencora reported a net revenue of $79.1 billion for the fourth quarter, a 14.7% increase year over year. For the full fiscal year 2024, revenue reached $294 billion, marking a 12.1% increase. John, what are the key drivers behind this growth?
The growth in revenue is primarily driven by a 15.7% increase in the U.S. healthcare solutions segment, which benefited from market growth and increased sales of diabetes and weight loss products. Additionally, the international healthcare solutions segment saw a 5.5% increase, contributing to the overall revenue growth.
And how about profitability? The adjusted diluted EPS for the fourth quarter was $3.34, up 16.8%, and for the full year it was $13.76, up 14.8%. What factors contributed to these improvements?
The increase in adjusted EPS is largely due to operational efficiencies and a focus on high-margin specialty products. Despite a decline in gross profit margins due to product mix changes, Cencora managed to enhance its profitability through strategic cost management and a reduction in interest expenses.
Operational efficiencies and future outlook. Despite the revenue growth, Cencora's operating income for the fourth quarter was $127 million, a significant decrease of 73.4% from the previous year. What caused this drop, John?
The decline in operating income is primarily due to increased operating expenses, including a $418 million goodwill impairment charge related to Pharmalex and higher litigation and opioid-related expenses. These factors overshadowed the gains in gross profit.
Looking ahead, Cencora has increased its quarterly dividend by 8% and provided a strong EPS guidance for fiscal year 2025, ranging from $14.80 to $15.10. What does this indicate about their future prospects?
The dividend increase and positive EPS guidance reflect Cencora's confidence in its strategic initiatives and growth potential. The company is focusing on expanding its specialty product offerings and enhancing its distribution capabilities, which should support continued growth and shareholder value.
Strategic initiatives and leadership changes. Cencora recently announced the acquisition of Retina Consultants of America and completed a leadership transition with Robert Mauch stepping in as CEO. How do these moves align with their strategic goals?
The acquisition of Retina Consultants of America strengthens Cencora's position in the specialty healthcare market, particularly in ophthalmology. The leadership transition to Robert Mauch, who has a strong background in pharmaceutical distribution, aligns with their focus on a customer-centric and enterprise-powered approach, ensuring they remain a leader in healthcare solutions.
It seems like Cencora is positioning itself well for the future. What are your thoughts on their strategic direction?
Cencora's strategic direction is promising. By focusing on specialty products and enhancing their distribution network, they are well positioned to capitalize on market opportunities and drive long-term growth.
Key takeaways. In summary, Cencora has delivered a strong performance in fiscal year 2024, with significant revenue and EPS growth, despite some challenges in operating income. Their strategic initiatives and leadership changes position them well for future growth. John, any final thoughts?
Cencora's focus on specialty healthcare and strategic acquisitions, along with their strong financial guidance, make them a compelling investment opportunity. Investors should keep an eye on their execution in the coming quarters.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Cencora's performance in the comments below. Until next time.